There are several other companies we can point to in Africa to establish this value proposition we are talking about. We can point to Cove Energy, which we mentioned at the last shareholders meeting, which in a space of 2 years went from $30 million to almost $2 billion, predicated on a discovery, the Rovumba field discovery in Mozambique. We can point to Heritage and the premiums that accrued on the discovery in Uganda. We can also point to Africa Oil, which by just aggregating assets and having little discoveries or production has managed to substantially increase its value. And then we can point, of course, to ERHC Energy itself, which has previously demonstrated the value proposition with a sharp rise in our market valuation and asset values between 2003 and 2006. And again, with a fairly healthy valuation up to the formal announcement at our 2010 annual general meeting of the disappointing results of the drilling program in JDZ blocks 2, 3, and 4. We are now actuating that value proposition again. We are starting again. However, there's a key difference this time. We are doing it in 2 different areas with 2 different sets of assets and possibly more assets to be added in the next few months. By so doing, what we want to avoid is the all the eggs in one basket syndrome and negative outcomes in the JDZ. It is to this value proposition and to its potential for significant shareholder value enhancement that we are asking you, our shareholders, to commit your support and more so your capital to its achievement. To increase the value of your company, to actuate the value proposition, to increase the money we, all of us, as shareholders, can make from this company, we need to spend money to enhance the assets. We need to raise up to $45 million, assuming we don't take in a farming partner before then. This is the value proposition of exploration and production. You spend money, you risk it, so that you earn very high rewards. The more money we can spend on developing the asset, the more we can potentially reap from the investment. In summary, ERHC is positioned to start with exploration work programs in Kenya and Chad. As we've described, we have every reason to be excited about the prospectivity of our target areas. What needs to happen next, however, is that we need to raise money. We understand that existing shareholders are concerned about dilution, which is why we plan one of our key fundraising efforts to be a rights offering. The rights offering will allow existing shareholders the opportunity to participate and to avoid proportionate dilution. It will also, hopefully, if oversubscription privileges are eventually included, it will allow willing shareholders to take up even more and show their support for this company if there are shareholders that don't take up their proportions. Our overriding objective, ladies and gentlemen, is to grow ERHC. That is the overriding objective. And in growing ERHC, we want to add value to our assets, and ultimately, we want to enhance shareholder value. This completes our management presentation. I thank you for listening. I thank you for your participation and interest. And I'll ask Dan, who is with the microphone, to coordinate the question and answer session.
What time frame are you looking at to start raising the money? I mean, you've got the okay now. Are we talking about the end of the year or?
Before the end of the year. Yes, we're expected to start in a few weeks. There are a few loose ends to be tied up with the advisors on a rights issue. But once that is done, we expect to announce that quite shortly.
And then the second question I have is with the preferred stock. Where would you be, in what cases do you use preferred stock instead of just common stock?
Well, you use preferred stock for debt. They're debt instruments, really. And usually preferred stock don't even have voting rights.
But I mean, is that more like a farm-in? You would use something like that, or?
Yeah, it's an opportunity to use preferred stock. But we wanted to make it very clear, and it's in the proxy statement, that there are no plans at this time. There was a lot of hesitation by our shareholders, and I think the voting pattern shows it, about the intention for preferred stock. It was more of a legal thing to have that option open, financial flexibility, in case it is needed. At this time, we have no current plans to issue preferred stock. But the lawyer said, since you are coming to a shareholder meeting, get all your approvals in once and for all. You know, you don't need to do it if you have a pressing need for it. You don't want to go and now start to hold another shareholder meeting and have to do a vote and all that. So do it once and for all.
Now, you said you need 45 million within 18 months. So let's say you get 25 million by the end of the year. Would you then have another offering later, or would you just go to the unsubscribed and try to raise the entire 45?
Let's make it clear. We're not going to raise all the 45 million in one tranche.
Okay,
you know, the work program, of course, proceeds along benchmarks. And so we will raise a tranche. It won't even be up to half of it first. You know, carry out the work program, demonstrate enhancement of value, and predicated on that. It's a series of steps. You raise some, do some, raise more, do more. That's how it goes.
Yeah, I have two questions about the rights offering.
Yes, Dennis.
First of all, is there going to be anyone backstopping it? In other words, is anyone going to buy the shares other than existing shareholders if it's not fully subscribed?
Yes. At the moment, we're talking with one or two firms. There's no firm agreement yet, so I can't answer yes. You know, we're talking with one or two people about it, but there's no definite agreement yet.
Okay, the second question on that is, you know yet if it's going to be a one-for-one rights offering, or is it going to be half a share for one, or do you have any idea what the ratio between what you own and how many you'll be able to buy is?
Yes, like I said, right now it's subject to finalization, but we don't expect it to be one-for-one based on the money that we expect to raise. First of all, what I would say, again, I'm bound by all sorts of legalities. What I would say, Dennis, is, you know, just give us a few weeks, because we are going to actually announce it once and for all. You know, there are all sorts of legal discussions going on right now, but you know, we ask your patience, and we'll announce it, you know, at one time.
If we do acquire more assets, you see us working, I mean, we got Kenya and Chad now, let's say you get Niger and somebody else. Would we go and work all four at the same time, or would you say, you know, we'll get going with the first two and then 2 years later try to do the next two, or could you have all four at the same time needing to be funded?
Appropriately then, we'll need to prioritize. Of course, if we get, best case scenario, we get all the funding we need, well, why not? We'll work all four at the same time. That's all enhancing value. But possibly then we'll need to prioritize. That's how most companies do it. You prioritize. The one that holds the most promise to enhance value, you start with that.
Under the old program, was there ever any drilling at all? It was around about 10 years. Was there ever any drilling or any production?
The company had what we called two main legacy assets. Marquee assets, which the company has concentrated on since it became an oil and gas explorer in 1997. These assets were in the Gulf of Guinea, around the islands of Sao Tome and Principe. There are two zones there in which the company's assets occur. the Nigeria-Sao Tome Joint Development Zone, and the Sao Tome and Principe Exclusive Economic Zone. By spread of interests, ERHC is the largest holder of interests across the blocks in that region, that 2 adjoining zones. Now, there were 3 blocks there in which we brought in the operating partners. JDZ blocks 2, 3, and 4. Between August 2009 and January 2010, we carried out a comprehensive drilling program run by our partners, ADAX and Sinopec, which drilled 5 wells across those 2 blocks. We drilled 1 well in JDZ2, 1 well in JDZ3, and 3 wells in JDZ4. Those were deep offshore wells, and they were all carried out without incident, within time, and under budget. Totally, over $300 million was spent. Unfortunately, the results were not as exciting as everyone had hoped. We did not find crude oil. We found biogenic methane gas, and not in sufficient quantities, so far as the results have shown, for a commercial exploration, for a commercial development. Where is the JDZ right now? Right now, lots of discussions are going on between the contracting parties left in there, including ERHC, the Joint Development Authority, and the 2 governments who own the region. That's where it is. When the results are not what you expect, they're not as positive as you expect, and all that money has been spent, then, careful decision making has to go on before you decide the next steps. And that's where that zone is. It was unfortunate that the results did not come out as everyone expected, but that is the high risk of oil and gas exploration. It's always the risk in oil and gas exploration, because notwithstanding all the technological advancements, notwithstanding all the science that goes into the process, there is still not one method that can tell you for certain before you drill a well whether there's oil there. Not one method. A lot of work has been done with direct hydrocarbon indicators, the surveys and the gravity and magnetic and all that, but no one can tell you for certain. So it's drilling that establishes for certain, and because of that, it is still a very high risk process. What happens is, if you strike it, it is also very, very high reward.
If you do strike product, what are the taxes in Africa for production taxes? I'm just curious what the rate would be.
Well, our taxes are actually determined by law in each country. In Kenya, it's according to the income tax laws of Kenya, and it's a sliding scale depending on how much production you generate. When you first start, there's very little tax, but as you increase, the tax increases. It's progressive taxation based on the amount of production that you achieve. Now, and just to explain, we're still far away from production. What we want to achieve by a value proposition is to take the assets from where they are now, and we showed the curve, to take them from there to where we establish affirmatively leads and prospects. By the process of shooting seismic, by the process of doing our gravity and magnetic studies, and we expect that in the course of doing that, not only do the value of our assets rise, but also, there's an accompanying rise in market valuation. That is where we're concentrated right now.